computer.
Questions.
All right, everybody, welcome. Good morning. So happy to have you guys here. My name is Anthony Volin. I'm the owner of The Collective. We're a residential and commercial real estate company in Los Angeles, serving the greater LA area. We have an amazing panel for you guys today. I'm so glad you guys have tuned in. We have a great lender, Mr. Marty from Arcstone Financial, who will be giving us super important updates. We have Will Tiao, who's the director of our commercial division, and he'll be talking to us about issues facing multifamily owners and much more. We have Tanner Brown, a realtor, and he's going to be talking to us about different property tax issues that are out there. We have Sarah Lehman with escrow from the Pango Group and Glen Oaks Escrow, and she's going to let us know what's happening in the world of escrow. And we have Zoe, who I have worked with for, gosh, I don't know, 15 years plus, and she's been in the business more than that. She's a title rep and with Stewart Title, and she has some great info for us today as well. So again, thank you guys so much for joining. And on this is our first webinar, so hopefully you guys will tune back in and be patient in case we, have a little technical difficulties, but I think we got it down, and we have a really great panel for you guys today and great information. So I'm sure you guys have heard that in the last day or so, LA County has extended the stay-at-home order through May 15th. So we're pushing it out a little bit longer. That means that, people are requested and required really to stay at home unless you are an essential service. Recently, real estate services were added to be an essential service for LA County. So that means that it is possible to do business, and business is still happening. It's just happening differently in our real estate world. So from appraisers to lending to how do you see a property to open houses, how does a property close and record? Everything's a little different, but it is all still happening, and deals are still moving forward. It's just a little different for a while our stay-at-home work order is in place. So again, real estate is considered an essential service for LA County, but we do need to do things a little bit differently. So that being said, we'll be able to explain all those differences to you guys today, but know that escrows are still opening, they are still moving forward, and things are still closing. So there are a few things that I just wanted to start with right off the bat, where there are some things that are going on that California Association of Realtors has done to protect home buyers. There's new forms. We have great attorneys that work for the California Association of Realtors, and their job really is to protect you, the consumer, our buyers and sellers. So the first form that you're going to see if you are buying or selling is a form basically that is basically saying if you're entering a property, you're entering it at your own risk. You're aware of coronavirus and the risks that entail that. So if you're a seller and a buyer comes into the property, it's basically saying that it's going to hold everyone harmless if anything was to happen and somebody unfortunately was to get sick. So that being said, there are very strict guidelines that our California Association of Realtors has. If you are going to see a property during this time, they're asking that maximum there's one agent and two other people in a property at a time. Each seller and agent will have their own policies, which may be stricter than that, but that's kind of the loosest that we're working with at this time. So if you wanted to have an inspector go in and the buyer be in the property at the same time, and there's two agents, then we're only allowed to have one agent in at the same time. So it's also really important to know that you as a buyer or seller or as an agent definitely need to adhere to all of our city and state rules for social distancing. So if you are a seller and you're actually living in the property, what a lot of people are doing is the sellers are leaving for the period that a buyer may be coming into the property. The seller would open up anything that a buyer would potentially want to see, turn on all the lights so that nobody else has to touch anything. If there is an agent and buyer going into the property, the agent is bringing hand sanitizer, they're bringing sanitation wipes if anything it does need to be touched, and then letting the seller know what happened. But so far, I've experienced showing a few properties and there hasn't been any issues. People have been able to walk in and out, look at the property, take a few pictures, and decide if it's the right property for them without having to touch anything and doing that. Everyone's also, of course, asked to wear a mask when they go into the property as well. So I have seen and experienced sellers at this time where they're putting their property on hold and they're living in the property and they're basically just saying, look, we do not want anyone in our house at this time until this is done, which is understandable. So their properties are put on hold. The days on the market that they had at their listing before are halted, and those properties will be on hold. So there's also properties that are vacant that obviously those are much easier to see.
So that's the webinar that's going on.
Marshall, you're on.
Oh, sorry.
So I've also seen properties that are vacant, and some of the listings I have are vacant. Those are very easy to see. There's either a lockbox that may be on the property where a seller will allow a buyer just directly to go to the property to take a look at it with or without the agent. And then there's some where an agent may come through and tour them as well. Sometimes the listing agent will meet a buyer at the property, open it up, stand outside and wait, let the buyer go in, take a look around, and then leave. So there still are ways that properties are being able to be seen, and we'll have some of our other realtors who are on the call also throughout this call share any experiences that they've had. But it is possible, it's just different. Okay, so if you are also a seller, many MLSs have decided to hold the days on the market. So if you listed a property before this pandemic, your days on the market will have stopped counting as of March 15th. So keep in mind that if you're looking on the MLS, you may see a property that has 1 day on the market for the next 2 months. If we're on lockdown for the next 2 months, and somebody listed a property while we were in lockdown, days in the market may say 1 day until this pandemic, the situation is over. However, if you're looking on third-party sites, they don't get the same data that the MLS does. For example, on Zillow or on Redfin or HomeSnap or other sites that people may be looking at, the days on the market there may be different. And the information that is on those other sites may be different and not updated as much. So the MLSs are working with those sites to get everyone in sync at this time. But as of now, that you might see different days on the market, which is understandable. So just check with your realtor and they'll give you all of the best information on what's really happening with this property. And also understand too that your realtor has access to private remarks that agents are putting out there that you're not going to see on any other website. That may say this property is able to be seen through your lockbox, or this property is not able to be seen for the next 2 months. So it's very easy for your realtor to find that information out. So check with them if you are interested. We've definitely are going to talk about a little bit later, is this a time to list your property, to buy a property, yes or no, and kind of weigh both sides of that and have a discussion about that a little bit later as well. So also, while this is all happening, we've also seen many realtors who do have listings jumping on networking calls with other realtors, trying to pitch their listings and explain any nuances that might not be able to be seen on the MLS. So the realtors are out there working for the sellers, trying to make sure that everyone is very well aware of what listings they have and how they're different and things that they might not be able to tell by just looking at the property on the MLS or HomeSnap. Okay. So why don't we jump on into our first speaker today. I would love for Tanner to start talking to us. If you're a property owner, we have some information for you on property taxes. So Tanner, why don't you go ahead and give us some updates on property taxes.
I'm mute. Sorry about that. So for everyone who doesn't know me, I'm Tanner Brown. I'm a realtor at The Collective. Most of you, property taxes were due yesterday for most of you, so hopefully you got that done. But if not, I'm going to tell you a few ways where you can delay payment and also have your penalties waived. But before we get into that, I wanted to remind everyone the role of property tax agencies. The assessor, the County of Los Angeles assessor, Jeffrey Pring, he does not collect tax money. When it comes to reassessments, though, he does establish value annually as a lien date of January 1st. So if you think your property has lost value, you can file for a decline in value thanks to Prop 8 between July 2nd and November 30th. Keep in mind that this applies to a reduction in assessed value and not market value. The tax collector of the County of Los Angeles has no authority to extend the April 10th deadline and can only extend the deadline if it is approved by the state. So that's not going to happen. However, beginning on April 11th, today, the day after property taxes are due, people unable to pay on time for reasons related to COVID-19 may submit a request for penalty cancellation online. The department has set up a special team to process these requests for those who demonstrate they were affected by the outbreak. If you are not able to pay, you can submit the application online, which I will post in the comments here for everyone to have. And they will be reviewing each case independently and consider all circumstances. The Los Angeles County property owners affected by COVID-19 may have late penalties canceled if they are unable to pay their property taxes. You'll need to provide a statement of reason or reasons why the pandemic has prevented you from paying. They are encouraging all property owners who can pay their taxes on time to do so, because this revenue helps keep the government running and provides vital services to the public, which we rely on, especially during times such as right now. Since county buildings are currently closed, there are no in-person payments, of course. And I'll go ahead and post these links at lacounty.gov for everyone. And then also a reminder, the governor has worked with most big banks to secure 90-day forbearance on mortgage payments, but please talk to your lender before you agree to anything, because there can be large balloon payments associated with that. And for renters, I want to remind you that no legal evictions are taking place right now in the state, but that doesn't mean you're off the hook for paying landlords back after the pandemic. Also, renters, you are not required to use any funds that you receive by the federal government in the next coming weeks. So don't let your landlord talk you into that, and don't sign anything. So other than that, Anthony, hopefully that covered all the property taxes stuff.
Awesome. Thank you so much, Tanner. Next up, we have Zoe Schulman. If you'd like to unmute yourself. Zoe's from Stewart Title and is going to let us know what's going on the title and recording side.
Good morning, everybody. Thanks for joining us. Well, just to let you know, the title company is up and running and fully functional, and we are able to digitally record all documents. Every title company has gone to electronic recordings, so they are absolutely happening with no issues. The only issue that we are experiencing is when you need to close an escrow and there are liens and judgments from the state or the federal government, such as IRS tax liens, there's a huge delay in getting that information, which can delay the closing of your escrow. I happen to be involved with one right now where there's an IRS tax lien. They've been trying to reach out to the IRS for days and cannot get through. And the only way that we are willing to close with an IRS tax lien is to hold the proceeds. So just be aware that it may delay the close of escrow, but otherwise we're fully working. We're working with customer service. We have a large building. Everybody is more than 6 feet apart, so we're safe. And we're there to assist you and help you in any way. That's it.
Perfect. Thank you so much, Zoe. If anyone has any questions for Zoe, feel free to type them in on the questions at the bottom of your screen. All right. Thanks, Zoe. Next up, we're going to have Miss Sarah Lehman from Granite Escrow in the Pango Group. Escrow is a great, it's kind of like the bird in the sky overlooking the whole industry of what's happening, because they're really seeing everything that's going on with all of these deals and how many are opening, how many are closing, and what's going on as well. So they're responsible for getting loan documents notarized and so on. So there's a lot that's going on there. So Sarah's a great resource to kind of get an idea of how are things feeling in the market as on the escrow side. So go ahead, Sarah.
Hi, everybody. I'm Sarah Lehman with the Pango Group. Glen Oaks is our local in LA flagship office. And we are still opening. We are still closing. We're just doing things a little bit differently. So we've had a business continuity plan in place just in case something like this might happen at some point. So we're half staffing our offices. Half the people are in. Half the people are able to work from home, which is great. So we're able to reduce contact for everybody within our offices. Our branches are closed to the public, but we can still send people out messengers and mobile notaries for the few documents that do need to be notarized in the course of escrow. Most opening packages can be done via DocuSign. So I highly recommend doing everything you possibly can paperless. It is a very good option at this point, and most companies are able to accommodate that. There are a few documents that need to be notarized in the course of escrow. We do need to have a notarization of the grant deed, disbursement of proceeds, and for the buyer, the loan docs. So what we're asking is that you fill out as much of those packages as you can, either virtually, electronically, or just have them filled out, which someone from our office can also go over the opening packages with the consumers and walk you through it, just so you can have everything you possibly need already done by the time a notary comes. We're also seeing a lot of notaries doing outside notaries, which is a really good option. So the notary will come, we're asking everyone working with us to follow COVID protocols. So masks, gloves, having sanitizer, all that kind of stuff on hand. And they're meeting clients outside, notarizing on the front of a car or on a patio table or in a garage, and just trying to keep it in as much neutral space as possible to protect the health of everybody. Remote online notary is not an option in California at this point for real estate. So California is working on it. There are 15 or 16 other states that are able to do it. We are not, and I'm not sure if that is going to happen before the end of the stay-at-home order, but we're doing everything we possibly can to reduce contact for the consumers. We have had a decrease in transactions. We're at about 35 to 40% of what we normally have year over year. And that dropped obviously after March 19th when the stay-at-home order went into place. Cancellations, we did have a lot of cancellations. They spiked between March 19th and the end of the month. And they more than doubled, but they've since come down, and we don't expect to see a continued rate of that, because anyone who's canceled because of the COVID issues has already done so. So a buyer losing their job or something of that. We've also had a lot of people reopen if they've been able to find new funding. So that is also an option. So another good tip for consumers, ask your bank if you're on the buy side of a transaction, if you can wire electronically. That is an option with some banks. So I would just check and see if that's possible to try to keep you from having to go into the bank. And just talk to your realtor about virtual inspections, virtual tours. There's a lot you can do before going to a property or without having to go to a property that your realtor can assist you with. So definitely lean on them. They're all very up to date on what's going on, and everybody's really like paying attention and doing their best in this situation. So yeah, that's about it for me.
All right, thank you so much, Sarah. Great information. Yeah, the notary part is the question I think that we're getting a lot. And people are like, well, are notaries still able to work and go out? And yeah, as of right now, they are. One of my clients closed 2 days ago, and they sat, 6 feet apart. They did their signing. They confirmed their driver's license and did what they needed to do. Used social distancing. Everyone had a mask on, and it was still done. We're hoping that our state is able to adopt some type of digital notary program. New York just did that like a couple weeks ago. California Association of Realtors is actually behind this. They would like something like this to happen. And just keep in mind that if it does happen, a digital notary is not like a DocuSign. There's more steps to it. There's actually a lot of the programs are using facial recognition. So it's a little bit more advanced than just DocuSigning or having click on a computer to sign something. So it is still very secure. It's just a different way of doing things. So we'll keep you updated if anything like that does happen. All right, next we'd like to jump into a really meaty issue with Marty Carey from Arcstone Financial. The lending market is definitely changing every day, and Marty's going to fill us in on exactly what's happening with that. So go ahead, Marty.
Hi, everybody. How are you? Happy Saturday. For those of you who don't know me, I'm Marty Carey with Arcstone Financial. I'm one of the senior vice presidents and co-founders. But just a lot of questions that I'm getting are, let me start off with the basics, and that's the rates. I mean, what are rates doing? Rates are still very solid. They're in the mid 3s to low 3s. According to the 10-year Treasury bond, we should really be a little bit lower than that. We should be probably in the 2s. But we're due to liquidity issues that we're having throughout the industry. It's artificially held up. So that's if we drop it any further, it's only going to exacerbate the liquidity issue. Thankfully, the government has stepped in and provided some liquidity, which made it a little bit better where, we found some footing and stability in the mortgage industry. These are all very specific to the, when I refer to agency products, meaning the Fannie Mae, Freddie Mac conforming loan types are very much stable at the moment. The problems that we're running into is the jumbo market is contracting quite a bit, where, especially in LA, we have, most homes are in the jumbo price ranges, especially the areas that the collective is in, obviously. So that's contracting. There's less availability. For example, Wells Fargo just stepped out of the jumbo lending arena, and they only want to deal with like high net worth people, things of that nature. Not everybody's following suit, but it's, it tends to do that. And we've seen this in 2008, but it's in the beginning stages, I feel like. Hopefully it doesn't, if this thing comes into a shorter timeline, hopefully it doesn't get to the levels of, these programs disappearing entirely for a short period of time. The other things that I wanted to talk about is, other than the jumbo programs, there were a lot of non-QM, meaning like the niche type products out there where people could qualify with bank statements or providing us profit and loss statements. Those programs have overnight disappeared because there's not a market in securitization in a secondary market for them. So they disappeared. So those programs are really unavailable at the moment, where we were able to help a lot of people in the entertainment industry that could not document their income documents via taxes or things of that nature. We were able to give them loans, and they were able to get into homes and realize their dream. But this time around, it's not available at this time. So that feels like there might be a possibility of that coming back in the next 2 to 3 months. Everybody's really working tirelessly to make these programs available again, but it's really not out there at the moment. The bigger issues that I really wanted to address is what's up ahead of us is now with the combination of the forbearance items that are coming out into marketplace is we're really, as lenders, are being required by Fannie Mae, Freddie Mac, and our investors to almost re-underwrite these files, what there are in process. So let's say, we have a client that is approved, ready to go, and now because of all the things that are happening in the marketplace as far as people losing their jobs, we are having to re-underwrite these files through the midway of the process. So, for example, if a self-employed individual was fully approved, now we're having to go back and document that they're actually making that money still in their bank accounts. They're having to provide us bank statements to show that they're actually getting deposits, business receipts to show us that they're actually in business still. So things that were not something that we'd normally ask for are being asked for. And so it's a good thing to create expectations for everybody to know that they're going to be asking their clients or we're going to be asking your clients that these items are going to be needed from them midway. An employed individual is going to be they're going to be asked pay stubs at funding. We're not going to fund a loan without seeing their most recent pay stub, that they're still working. There's going to be a final interrogative verification of employment. I feel like, they're going to call your employer and say, are you on furlough? Are you going to be possibly declined? You're going to have a decline in your income or shortening of your hours. So those things are going to affect transactions that are in process at the moment. So we're having a lot of conversations with the borrowers throughout the process to make sure to let us know, because we don't want them to spend any more money on inspections and appraisals and things of that nature, that if they have an inclination that they're going to end up being on a furlough or they're going to have reduced hours, things of that nature. So it's really important to have that open and honest conversation, and it's always good for realtors to empower their borrowers to have that transparency with us as well, so that way we don't go to the end of the transaction and find that we're not going to be able to fund it. So let's see here. Government loans. That's the other big thing is, FHA has always been a good outlet for people to buy homes with very little down. Unfortunately, again, FHA, Ginnie Mae, which is the buyer of these FHA, VA, USDA loans, they're experiencing major liquidity issues. And so they've now, because of these issues, we're having to increase the tightening up the guidelines. So anybody that has a 640 or below credit score is probably not gonna be able to get a loan at the moment, unless they pay exorbitant amount of money to buy down the interest rates, because the rates are gonna be super unfavorable for them. So that way it's not something that they want to, book on their books at the moment in time. So because of that, it becomes unaffordable, because a first-time home buyer generally doesn't have that much money to buy down an interest rate. So really, we're looking at these first-time home buyers with 640 or below credit scores are really not going to have an opportunity to get into these homes that are available until there's more liquidity. This is not a permanent thing. I don't know what lies ahead of us, if it's going to be loosening up sooner, or maybe it's going to be 6 months to a year from now. So it's the current state of the matter is that you're going to have a very difficult time getting an FHA loan under a 640 credit score or a VA loan. And it's unfortunate, because we believe in providing homeownership, obviously, and making the American dream happen. But at this point in time, because of liquidity, it's the reality. We're also having everybody sign attestations at the end of the transaction saying that they are not going to file for forbearance, and that they are not, their income is not declining. So these are documents that the borrowers are going to see. What is that? Something just popped up here. And these are documents that the borrowers are going to see that have never seen before. It's because of the state of the matter of what's going on. They're going to have to attest that they're not going to go into forbearance while we're funding this loan. We don't know what's going to happen down the line. Obviously, they might have to file for forbearance, but while we're funding these loans, they're saying that they're not going to have to do that. And also saying, letting us know that they're not going to lose their job, and also they're not closing down their business. Very, very different than what we're used to. I wanted to also touch base on the appraisals, as you talked about earlier, Anthony, is that appraisals have laxed a little bit on our side on purchase transactions. 90% of the time we can do a drive-by without having to go into the property itself. So that opens up the us as lenders to a little bit of risk, but you know, obviously we have to protect the health of everybody involved. So, but that said, I mean, that is available on purchase transactions. Some refinance transactions are allowed. Let's say if the loan is owned by Fannie Mae or Freddie Mac, we're able to do a drive-by as well. Most cash out transactions, you cannot do something like that with, or investment properties, you can't do drive-by with. So we're trying to make it as easy as possible for people to get their loans through on purchases on the appraisal side of things. I don't know, am I going ahead too much?
No, that's great. A couple of things regarding appraisals, just one experience that I had this last week. I had a condo that I had into escrow. It was the highest priced condo for the makeup of the basically a 2-bedroom, 2-bath condo in the building. It was the highest priced one that went on the market. And the appraiser came out and did their job. And I was concerned. I was like, wow, I wonder what the appraiser's thinking about value. Is this going to appraise or not? Because we're in such an interesting market. The property ended up appraising at value just fine. And conversation that I had with the appraiser was she felt that at this time, because we have such low inventory, that prices overall have not really dropped, that we haven't really seen that happen yet. Even though there's less lending programs available that Marty's saying, we still have basically very low inventory, or that is completely affecting where our values are at. So we'll talk a little bit more about values, and I'd love to get the opinions from everybody else on this panel, but just wanted to throw that out there. Also, Marty, we have a question from Ray. He's saying, is there a high or low chance of refinancing on an apartment building right now, or not much chance with the rent issue, about 10% unpaid right now? So I guess 10%, this is kind of what we're hearing from a lot of building owners, about 10% aren't paying their rent. Will fill us in a little bit more on that if he has any more updates. But is he going to be able to refinance, and he has 10% of his people not paying his rent?
So yes, I mean, the long and the short of the answer is that as long as a property is debt servicing, that's what we're looking for when we're looking at commercial financing. So if it's not debt servicing with a 10% reduction, then no. It's almost like the qualification of the property. And there's also like variances that we have in place already, vacancy variances that we put in, and it's a 5% vacancy variance that we put. So if it's not debt servicing, I'd say absolutely not. It's not going to be financed. And it's becoming a lot more restrictive. Every day we get various different investors putting in overlays with the reduction of the rents received. It's a reality. That's what's happening right now. We've got many clients, even on the residential side of things, where we're being extra cautious. If somebody owns too many properties and that's majority of their rental income, even on the residential side, we're cutting that income by at least 25% because we're seeing that the person is going to suffer some of those losses going forward. But on the commercial side of things, the word is still, if it's property is still debt servicing, there's nothing that would stop them from refinancing at the moment.
Great. All right. So how about rates? How are rates right now? I know I have a few buyers who have been looking and want to get in because rates are definitely better than they were, a month ago or 6 weeks ago. What's going on with that? Can you talk about rates a little bit?
Yeah, rates are in the mid 3s to low 3s, depending on the various different programs. I don't see rates moving anytime soon. Our bond market is all-time low, as always. I mean, we've been talking about this for the last almost 2 months. We've hit below 1% on the 10-year treasury. I don't see that moving anytime soon. I mean, based on what I'm seeing, as I mentioned earlier, rates should be in the 2s. So everything is padded to slow down production because we can't fund and securitize these loans fast enough, or there's no market for it at the moment. So if we drop it down to 2, it's just going to exacerbate the situation. So there's if liquidity doesn't become available, I tend to see rates moving up to slow down things even further. Not because of what the markets are doing, but because what could be actually securitized. So I would say currently, if you're looking to buy a property or refinance your property, you're looking at rates of between 3.5 to 3.125 is what we are looking at.
Got it. Okay. Pretty amazing rates.
Yeah.
Before we get to Will, just wanted to remind everyone, at the bottom of your screen, there's a question section. So if you have questions, feel free to use that. Also, feel free to use the chat function if you wanted to ask anyone questions there. That'll be seen publicly to everyone in our webinar today. So feel free to use either one of those, and we'll definitely work on getting that answered. We're going to move on to Will, and then if anyone has any more questions, we'll address that. So,
can I add one more thing, actually, Anthony? I apologize. I really wanted to talk about forbearances for a second, because I think there's a lot of misinformation out there for everybody. So I just wanted to touch base on that, if that's okay with
absolutely.
So forbearance, they're wonderful. It's helpful for people that don't have the payments to make. I do want to make sure that everybody understands. We went through this in 2008, where people were given opportunities to not pay payments and things of that nature, and they suffered credit issues for the next 4 to 7 years, because what will happen is if you don't make your payments for the next 2 to 3 months, or even sometimes in some instances they're moving it over to 6 months. So let's just assume that your payments are $3,000 a month and you don't have that money to pay right now. In 3 months, your lender is going to say you owe us $9,000. They're going to balloon that payment for you, and you're going to say, buddy, I didn't have the money at $3,000. How am I going to have $9,000 now? So, and that's going to put you on to the next step, and that's going to be a modification. And a modification is reworking your note that you signed with the investor or the lender initially, and adding on to the mortgage that you have currently, and adding that $9,000 onto your mortgage at the end of the mortgage, or actually spreading it out within a period of time. So there's various different ways of modifying, and every single servicer or lender does it differently. The reason why I'm a little bit more passionate about talking about this is that most people are, this product, this forbearance is being provided to everybody, saying that it's almost like a freebie. It's not a forgiving of your payments. It's none of it. It's literally going to, if you cannot pay that mortgage by the full amount or the balloon amount, it will affect your credit. A modification will go into your credit history. And if you decide to refinance down the line, that's going to impede you from doing things of that nature. So, it's obviously there if you desperately need to use it, but really find a way, if you can, to make your mortgage payments, because it's going to hurt you down the line, and it's going to stay on there for 4 to 7 years. For example, in 2008, when people did modifications, they were ill-informed of this, and so they would come to us and they're like, we're ready to buy a year later. And it held them back from being able to buy for 4 years, because that was a credit item on their credit report. So
let me cut in for 1 second. I was on a call last week with Senator Ben Allen from California, and a lot of people were asking this question, because they said, yeah, exactly what you're saying. Last time it did affect a lot of people's credit. And he said there was a lot of talk at federal level saying that they wanted to do something where credit will not be affected, where all of these servicers would not be allowed to report this as a negative credit, but it hadn't been done yet. And then this week I was reading something from National Association of Realtors, and they were saying that that so far federal government is encouraging all lenders to not report it as a negative credit, and that basically, like you said, the first step is to push your payment out 3 months. But then I'm pretty sure now they're requiring them to offer a modification at the end of that if they still can't pay. And I guess the question is, like, will that modification from your lender affect your credit or not? So I think that's something definitely everyone should talk to their lender about, because there is pressure from the federal government to have it not affect your credit this time as it did last time. But there's no set rule yet. So it's something that's still evolving. Does that sound pretty right? accurate, Mark? Do you agree?
Yeah, so right now, the actual payments are not supposed to get reported, that you're not actually late. The modification will be a credit history because we're always gonna, as a lender, whoever you go to apply down the line, they're gonna ask for a verification of mortgage during this period of time. And that's gonna open up an underwriter is gonna ask for that question, and it's gonna open up a credit event. So whether it's your credit or not, it's gonna come up at one point.
Are there lenders that you've seen or heard about that are basically that the first step is adding, your missed payments to the end of the loan? So it's basically almost like a modified loan from the beginning, rather than just saying, okay, well, you owe it to us like a renter would in 3 months.
So everyone's giving out different information out there, but what's going to happen, a standardized way that's going to happen is going to be a modification, and it's not an automatic modification. You're going to have to apply for it. Some people might come up with that. I mean, some of the more sophisticated servicers might, but this is not a standardized way of doing it. And it could become a problem. Like it's very few are going to be kind and understanding of the situation. They're really looking to make sure they get their funds, and they're going to report this on their credit report. And if it's not reported on their credit report, it's going to come up. So as I said, last time around in 2008, some people were doing modifications. It may have not come up on their credit report, but we would have asked for a verification of mortgage during that period of time to make sure that there was no credit event. And whether it's on a credit report or not, it will surface. And that's what I'm concerned about, because it will affect the industry overall. Because if we can't have people buy homes because of a 3-month period down the line for 4 years, or they're going to be penalized for it, there's a long-term effect in the industry overall, I would say.
Someone asked a question regarding forbearance versus deferment.
Same thing at this moment. I think it's synonymous. If you're deferring and if there's a forbearance, they're the same thing. If you're deferring your payment or given a forbearance, I mean, I think the forbearance is a more of a standardized way that we call it during this period of time, but it's the same action.
I have a question, because in 2008, in order to get loan modifications, you actually had to be, quote, in default and in foreclosure. Do you know if that's going to occur this time, if it's going to have to go through loss mitigation, where they actually start the foreclosure process? Because that will obviously impact your credit.
So no, it's not going to go through the foreclosure process, because that's one of the things that has been, very clearly said, that we're not going to start foreclosure process within the first 3 months to 9 months to 3 months to 6 months. So that is an important thing to know. You're not going to get foreclosure notices. You're not going to get a notice of defaults. Things of that nature are not going to happen. But again, at the end of that forbearance, you will have a modification to deal with. Now, we don't know how every servicer is going to deal with that. Are they going to make you qualify for that modification? Are they going to say, well, you have a job, why do we need a modification? Pay us the money now. Or show us and prove to us that you really are eligible for this modification by providing a hardship for us. So last time what happened was in 2008, everybody had to show hardship, that they could not make these payments. And if you're in dire hardship, they were not even giving you a modification because they thought you were not going to be able to make a payment anyway. So might as well foreclose at that point. Right. So there's this fine line of qualifying for a modification as well. It's important. I really do think it's something to talk about and educate everybody, because there's long-term effects in the industry and on a person's credit for a short-term relief. Again, if it has to happen, it has to happen. But I feel like what's being advertised or being said out there is that everybody can do this. And I would really make sure that, and implore everybody to look deep and say, do I really need to do this? Because it's going to affect my credit down the line if I can't pay this $9,000 or whatever your payment is, that's being deferred, balloon payment at the end if I can't pay it. So I would really... So
that balloon payment at the end is considered a deferral?
It's the deferred amount, or the forbeared amount is the same amount.
Okay, so someone was asking a question just to clarify, because I'm not quite clear either. So it says, so a deferral will hurt credit down the line because it's considered a modification, or is a deferral just a delayed payment that you're going to maybe make later in the year? And that's something that they're allowing, that they're saying, no, we will not affect your credit because of that. And it's not a modification.
And I want to just make sure I understood the proper credit. So are we saying that if we defer the payments, are they going to, is that going to be affecting the credit? Is that the main question?
Yeah, what is the program that won't affect the credit?
So right now, what the government is saying is that if you don't make your payments for the next 3 to 6 months, depending on what your servicer or your lender is saying, they will not report on your credit report that you were late. At the end of that period, you will owe them the full amount. So let's, for example, let's use $3,000 a month as a payment. If you defer it for 3 months, you will owe $9,000 to that lender at the end of the month, at the end of the third month.
Are there any lenders that are giving you more time than that?
They are, yeah.
Okay,
Like,
so
example,
everyone needs to kind of check with their own lender if they want to defer. But hopefully the deferral isn't going to affect credit. So it's like a short-term fix if you know you're going to get more money later this year and you can make up for your loss now.
Yes, but
Okay.
I do want to add to it though, because this is going to be an event that lenders are going to keep track of, obviously, because just like in 2008, we kept track of who's making their payments. We wanted to know who we're lending money to. We are going to go back, and this is almost 99% sure. I should do product development, credit risk guidelines for countrywide and various different companies. These are things that we put in place after the situation happens, like the pandemic happens. We say, okay, we really want to know who this borrower is. Did they get affected by this situation? Did they lose their job? What happened? So we're going to want to know down the line, did these people actually make the payments, or did they take advantage of that forbearance amount too? So it's not going to be on your credit, but it's going to surface. So I'm just letting you know that it's going to come up at one point, and it's going to probably hinder you from future lending, even though it's being advertised that this is a freebie, this is not going to affect you, take advantage of it. The goal is to keep the economy going. That's what it is. We want to make sure everybody's not, handing in their keys saying we can't afford this payment, we want to walk away from this property, and then all of a sudden the banks are going to be held with massive amounts of REOs again. That's not the goal. That's what the government is trying to avoid at the moment. But what's happening with the ill information that's being put out there is that that burden is being transferred onto the borrower now, or the consumer. Now they are going to be held with the credit event if they're not making the payments. But by all means, I'm saying if you need to use the forbearance, it's available and do it. I'm just saying look deep and find out if you really truly need to do this, because the short-term relief is going to have an impact down the line on you. It's not going to be a freebie.
Thank you, Marty. All right, let's move on to our commercial director, Will Tiao. Give us some updates on the multifamily side and anything else that you have with your words of wisdom.
Yes, hello everybody. Good to see you all. So there's a lot going on the multifamily side. I think obviously the number one question I'm getting right now from my clients and pretty much everybody is what's going on with rents? Are people paying rent? So basically I've read now several articles that say nationwide about a third of renters are not planning to pay rent this month. Amongst my own portfolio, we manage a little under 200 units, mostly in the city of Los Angeles and a little bit outside. We're at about in the 15 to 20% range of tenants who have requested some type of rent payment deferral. So it is definitely happening. Obviously, I mean, a lot of people have lost their jobs. As we all know, unemployment numbers are skyrocketing. So what does this mean for property owners, and how do you handle it? So in the state of California, there's a few things that property owners need to be aware of. So first of all, on the state level, there is an eviction moratorium through the end of the state of emergency, which is through May 31st. So the state of California has said that basically no evictions can happen during the state of emergency through the end of May. Now, beyond that, the California Judicial Advisory Board, which basically advises all judges in the state, has put out guidance that says that there will be no unlawful detainer hearings, no eviction hearings until 90 days after the end of a state of emergency. So if the state of emergency stays at May 31st, there will not be a single unlawful detainer hearing except for the case of health and safety. That's their only exception, for at least 90 days. So that means we're looking at August 31st if the state of emergency isn't extended beyond May 31st. Then there's the city of Los Angeles, which is where most of my units are that we manage are in. The city of Los Angeles has its own eviction moratorium as well through the end of the state of emergency. They also have put out guidance that tenants will have up to 12 months, 1 year, to be able to pay back any rent that they can't pay. Now, once again, this is where there's some misinformation. There's some people who see this as rent forgiveness. That's not what this is. This is rent forbearance, which is to say it's just like exactly what Marty was talking about on the mortgage side, except it's on the rent side, where if you don't pay your rent this month, then you will owe 2 months next month. And then if you don't pay it again, you will owe 3 months. So what we're doing and what many landlords are doing is trying to come up with a payment plan so that people don't get too far behind. Otherwise, they will be hit with a pretty major balloon payment at some point. And that's obviously going to be very difficult for a lot of people to get back out from under. Like I said, we're seeing about 15 to 20% rent, requests for rent deferrals this month. We expect, obviously for April rent, a lot of people worked through most, at least, half of March usually. So a lot of people had some money coming in. On the, obviously as we move further and deeper into this crisis, I am expecting those numbers to potentially double for the following month into May, and then who knows if it go beyond that into June, and if it has to extend because we're going to have issues obviously. Now there's another situation regarding what you can ask a tenant in order to show. So just to be also clear is that these rent deferrals are not just for any reason. It has to be COVID-19 pandemic related. So in our case, we are asking for documentation to show that a tenant, has been affected by it, whether that's through test results, a doctor's note, termination letter, pay stubs. Now, technically speaking, tenants are not legally required to show those things right away. However, a lot of our landlords this is their sole income, and if they don't get that income, then they are going to have to ask for forbearance from their lender as well. So it's more for the lenders, because the lenders we're finding are asking for that information. So we're trying to work with our tenants to explain to them it's not that we don't believe you, it's more our lender is asking, the lender of the landlord is asking for those things. And like I said, and to try to come up with a scenario, a payback plan that where everybody, where a tenant can make their payments. Now I'm looking at a couple questions here that I think I definitely need to address. One question is, I have a buyer looking to buy residential income property and will occupy one. Is there any way to ensure renters will pay during this time? Technically, the answer is no, because there's no stick, right? There is no eviction stick right now. You cannot, as I mentioned, do an eviction during the state of emergency. They won't even hear cases through the end of August. And I was speaking to a landlord-tenant lawyer just 2 days ago, and he was telling me a story of someone had sold a house, and there was a rent back provision to the seller for them to to stay there for like a month or two and then to leave. Well, the seller, after they've closed, has not paid rent, and they're thinking he may not leave. Okay, so what do? I mean, you're in a tough spot. You're in a tough spot right now because you don't have a stick. You cannot. You can still serve them. You could still serve that tenant, but like I said, you cannot actually like get a summons or any of that stuff moving forward. So once again, this is where you need to start speaking to your lenders, obviously, about the situation. If you do have a note on the property, and explain those things. That's why documentation is really key in these things. Another question I saw is, what is the best practice for apartment managers for showing units to potential renters? So in the city of Los Angeles, there is a moratorium on in-person showings. That applies to either agents or for apartments. So what we're doing is we're doing virtual tours. We've done virtual tours of all of our apartments that are vacant right now. We're trying to arrange it so that, there might be contactless showings, where they're able to show up. Now, there is some liability with that, right? That's a concern, because if there's a contactless showing, there's no one there when someone goes to see an apartment, like that's an issue. So, and even when we have tenants we basically told all of our tenants that we will not be going to the properties unless there's an emergency. If we have to enter an apartment for whatever reason, not only do we do our typical 24-hour notice, but we also have a special, like there is on the CAR forms for the realtors out there, there is a California Association of Realtor form, a ZIP form, that basically states the liability, we understand there's a pandemic going on, we need to enter your apartment for whatever reason, please know that there is some risk involved, basically. So these are all things that everybody needs to just be aware of. Now, I should make this clear. Like I said, some of the things I'm speaking about are LA specific, like for instance, the 12-month payback. LA also has basically taken out all rent increases during this time, as well as all Ellis Act evictions all of those are stopped for right now. But if you're in a different city, in a different jurisdiction, each one has its own rules. So you should look those up. One resource that we use is the Apartment Association of Greater Los Angeles, AGLA, AAGLA.org. They have a list of all the different cities in Southern California that have what their eviction moratoriums or whatever their rules are, if they have any. So those are things you should consider. I'm just checking to see if there are any other questions. Oh, how are you doing a virtual showing? We basically do a video of the unit. We're or you can do a FaceTime, like a FaceTime on your phone or Skype or whatever, or Zoom. You can basically go through and show them live. In our case, we actually shoot a video, film a video, and then record it, and then send that out to potential tenants. I'm trying to see if there are any other questions that need to be answered. So that's all on the rental side. On the sales side, on the brokerage side, what Anthony is saying is, on the residential side, we are finding pretty much to be true on the commercial side as well, is that values have not really dropped that much. Obviously, pre-pandemic, the other major crisis in California is a housing crisis, right? There's still a dearth of housing. So because of that, we still haven't seen values go down. Now, obviously, showings have decreased, sales have decreased. I think, a lot of investors are kind of waiting on the sidelines. Some investors, though, have been contacting me, have been asking, hey, is there anything out there? You know, we've got the cash on the side. We're looking for deals. And so we're transacting. We are absolutely like working on deals. I've got several off-market deals that I can talk about later that, you know, if people are interested. Once again, it's obviously at this point more of a lending question, whether or not they're able to get the funds, or if they happen to have funds sitting on the side, you know, there's a possibility of picking up some, you know, some deals. Now, let's make it clear, right? It's not like we have to be clear about what a deal looks like, because I've had some people be like, oh, well, maybe somebody bought something for 1.8 and I can pick it up for 1.3. Probably not, right? I mean, the likelihood of someone being able to pick up that much of a decrease is rare, right? But, you know, if someone's in distress and they're looking to get out, you know, you might be able to get something for a little bit cheaper, you know, maybe like a 10%, 15% discount from what it would have been. And don't forget, so in China, now that they've started lifting their, you know, their quarantine, the real estate market popped. I mean, like tripled almost overnight because of the pent up demand. So there is that to consider as well, that when this is all over, it's not like the demand's going away. That demand's going to be there. So it's just something to consider as you're moving forward, as you're considering risk versus reward. And yes, I mean, this is a unique time in our country, in the world, obviously, with what's going on. And in some ways, you know, I'm having talks with a lot of my landlords, and I'm just encouraging them not to panic, that everybody's in this boat and we're all human beings. We all have to be like, you know, like, luckily all of my landlords have been trying to work with their tenants and coming up with, you know, they're all very understanding. They're like, of course, this is outside of everybody's kind of, you know, whatever. But at the same time, bills do have to be paid, as Marty mentioned, you know. And so you just want to make sure that however you do it, you understand the rules. And that you're, you know, even for us who are professionals, I'm watching rules change almost every day. Like I literally, right before we got into this call, there was another guidance from the Department of Real Estate that just came out for landlords. Okay, so I'm literally reading these things daily, sometimes hourly, that appear to be changing. So you just want, if you're not aware of them, you want to make sure that you're working with someone who does know all these rules. I'm on the phone constantly. I'm on webinars constantly with other property managers, real estate professionals, commercial brokers. We're all just sharing stories and, you know, finding out what are the best practices that others are doing.
Thank you, Will. Does anybody else have any other questions before we start talking about any properties that we have coming up? Does anyone have any other questions, or anyone else have anything else they'd like to chime in on and say?
I just wanted to say that, you know, Will's absolutely right. It's changing so fast. We get notifications my emails have tripled, like the Chinese real estate market. So it's I mean, the emails of what changing, what rules changing, what investors pulling out, what's not. It's just, so stay tuned. You know, join these webinars, very important, I would say. So, because there's a lot of stuff changing. Something that may be valid right now may not be valid tomorrow. So.
Awesome.
Anthony, I saw a question from Steve Jones that I just wanted to answer.
Yeah.
So he said, David Ryu, council member, keeps stressing to tenants that they don't have to show any proof to a landlord, and that any landlord that asks is doing something illegal. Okay, so let me address this. So as I said, tenants are not required to show documentation. You know, it's not a requirement. However, they are required to have some type of documentation, because they, in the case of unlawful detainer later on, they're supposed to have it. You know, they're not required to show it. Now, we are asking our tenants to show it, once again, as a way, it's a negotiation, right? In terms of like trying to negotiate like a payment plan so that everybody is on kind of the same page. once again, it's not even for the landlord, it's for the lenders, right? It's more for the lenders so that you can show them like what's going on. And so, so yes, there's no requirement that tenants show anything, but it's a, it's like I said, it's kind of, it's a little bit of a dance, you know. And I'm telling all my landlords, work with your tenants, right? There is no stick right now. There is no stick in terms of doing unlawful detainer. So one way or another, you have to make a decision. Like I just had a conversation with a landlord last night who has, they have a 2-bedroom in Silver Lake, and one of their tenants can't pay. They're both in the music industry. One's in Australia, can't even fly back. He's definitely not paying his half of the rent. The other one is out of a job, is asking if, you know, he can pay half the rent. He's also willing to vacate the unit. And we were literally like going back and forth. Okay, do we take half the rent? Because if you have a vacancy right now, obviously it's going to be tough to get it filled, right? Because literally we have a stay-at-home order, so it's tough for people to go see it. So he's like weighing, do I allow them to vacate, or do I take the half rent? You know, and what does that mean? And these are the types of questions you're gonna have to ask, and you have to game out a little bit with an unknowable future about what that looks like. You know, because we don't know how long this is going to last. I mean, they just extended the stay-at-home order to May 15th. That could be extended again, okay? So we all just have to be aware that these things are evolving, and you know, work together with everybody, you know, with your lender, with your tenants, you know, and try to figure out how to best get through this situation. You know, some of the lenders I'm talking to are like, well, maybe we switch you to, like, instead of interest and they'll do an interest only loan so that they can lower your payment. Okay, so that's an option. You know, the experience I've been hearing from landlords is that the bigger banks, your Wells, your Bank of Americas, your Chases, they're more, because they have so many in their system, they're more likely to just immediately throw the 3-month forbearance. I don't know how that affects your credit, but that's what I'm hearing. The smaller lenders, they're looking at it on a case-by-case basis, just like the landlords are, you know, with their tenants. Everything's on a case-by-case basis.
Great.
I also wanted to say one more thing, Anthony, is that the forbearance is only for agency type government backed products, Fannie Mae, Freddie Mac, and government products. They don't have to do it on privately owned loans. So for commercial properties, things of that nature, you're not required to do so.
Okay, good, thank you. Everyone who's on this call, if you'd like to answer the poll at the very bottom, it's just asking how frequently would you like us to update you with these webinars, weekly, every other week, or once a month. If you could answer that, that would help us to determine what's going on. This video, Zoom video call was not posted on Facebook Live like I had hoped. It's just getting the tail end on there. But we do have it recorded, and we will be posting it on our YouTube channel, so we'll get that information out there shortly. But thank you guys so much for these amazing questions. Now we're going to talk about a few properties and let you guys have an amazing weekend. Thank you to all of our panelists. You guys were so awesome. Thank you, Zoe with Stewart Title. Thank you, Will. Thank you, Sarah from Pango Group. Thank you, Marty. Amazing. Thank you, Tanner. You guys were so helpful. This was a really great webinar. We had a great attendance, so we'll definitely be doing this again. Again, I'm Anthony Vullen with The Collective, the owner and broker, and we're just honored to be able to give you guys all of this information in real time because it's changing so fast. So stay tuned. Follow us on Facebook at The Collective Realty, and we'll keep you guys informed. Have a great weekend. So now let's get into some properties. Well, would you like to talk? You have an amazing opportunity coming up.
Absolutely. I've got 2 off-market properties that I'd like to share. So let me share my screen here. I just want to make sure. Do this. Oh, it says the host has disabled attendee screen sharing. I don't know if I
Maybe let me allow. Let's see.
Sorry about that. In the meantime, I can answer some of these questions.
Is it there? Oh, I'm sharing my screen. Okay,
So I'll answer some of these questions. Can you have a tenant sign a contract to agree to repay back rent in 12 months? So, like I said, you can, oh, my thing's going.
You can share anytime now.
Well, I can share, okay, got it. As I said, you can come up with a payment plan. You can ask a tenant to sign it. Whether it will be valid is a question mark, you know, in terms of will the courts uphold it. But regardless, it's true that the tenant has, 12 months to be able to repay it, and then at the end of the 12 months, it's due. So there is that. Another question, is 12 months after the state of emergency or 12 months from which benchmark? It is after the end of the state of emergency. That's my understanding. Any other questions that I should be aware of? Oh, are you getting prospective tenants reaching out on vacancies now? Yes, we are. But it just depends on where it is and what it is. I have studios in Boyle Heights in the 1,000 to 1,300 range. Those are getting, we're getting prospects. I have 1-bedrooms in North Hollywood, in the 1,600 range. Those are getting inquiries. My 2-bedrooms in Silver Lake, not getting inquiries. 2-bedrooms, 3-bedrooms, Silver Lake, Westlake, Los Feliz, which are a little bit higher. They're not getting inquiries. So it just depends on where it is and how much. Okay. Okay, here is a 5-unit that's completely remodeled. It's in Westlake. So there's a 4-unit in the front here and a single in the back. The 4-unit is, so all of them have been completely remodeled. Everything is done, top of the line, appliances, everything. So that front unit, the 4-unit, is a 4-plex with 2 3-bedrooms. On the top, 2 3-bedroom, 1.5 baths. Great skyline view, obviously, of downtown from the windows. These bottom units are both 2-bedroom, 1 baths. So right now he has those priced at $2,550. They're both going to be vacant, the 2 bedrooms, and then the 3 bedrooms upstairs are going to be 3-bedroom, 1.5 baths are at $2,775, and he's already got one of those rented. And then let's see. Yeah, as you can see, great, great finishes, washer dryers in all the units. Skyline views of downtown. There's also 10 parking spaces in this complex, not including 5 small garage parking spaces. And when I say small, we're calling them kind of garage/storage spaces because they're, it's for a very small car. So it's mostly storage spaces, which can also be rented out for an additional like $100 each. So that's extra income for the owner. Let me see. We also have a 3D tour of all of these units. So if you'd like to see that, we can send that over to you. This is a 3-bedroom, 2-bath house in the back.